You are about to find out the key levels for Dish Network's ticker DISH. Now, from a day trading perspective, if we're just looking at the intraday, again, did provide some nice trading opportunities. We broke through our first deviation, we broke to the downside, we tested our anchored VWAP, and that was really the signal to get short intraday. So day trading was quite nice, but what are the key levels for bigger moves or potential swing trades? So if we zoom out a bit, what we can see is if we continue to the downside, I'm not really paying attention to this stock because we have one support and that's at 685. This is the quarterly VWAP. A quarterly VWAP just means this goes from the 1st of June. So again, significant, but I don't think I would be buying solely off this number. So 685 though would be that support, and if we go lower we have our other level at 560. Now this isn't a level we tend to be long bias. This is a level that we instead use for a target. This grey dash line is statistical mean, meaning it's fair value. So if we were trading these levels short bias, that would be our final, absolute final target to trade it short. So stating that this is where fair value is, that's really our only support. We don't really have too much support, and the reason I'm not looking at this from a support perspective is how it's been trading. Look how this stock trades. 6 month strong downtrend, 1 year chart strong downtrend. When I see this, I don't want to be trading this long bias. I want to be trading it short bias with the overall trend. So that's what I'm more focused on. And so for these high probability resistances, we still have this $9.77, basically what we hit before and sold off. With our target being 813. Now, considering we've already hit this level, I would be using smaller size if you were looking to retrade that. But if we did break higher, some sort of a squeeze, I'd be looking at 1168 and 1395 as those key resistances. Again, whether that's from a swing or day trading perspective, I'm going to be short bias from those levels. And if we did continue up, we have two further resistances at $15.18 and $18.10. And again, these are our third deviations. We really don't expect price to trade above this level, and even if it does, should be very short-lived, because if you understand standard deviations, you would know that 99.7% of data trades within the third deviation. So that tells us we have a high probability that we should be staying below that 1810. Now, this is the stock market. Nothing's going to be 99.7% accurate, but it just gives you a good understanding that if we are coming over to that value, we are extremely overbought. And unless there's some sort of crazy catalyst that kind of justifies that sort of move, like maybe a buyout at $20 a share, unlikely that we hold a move above that level. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.